On March 5th, Bitcoin dropped 14% in just 2 hours. There was $1.5 billion of traders liquidated this day alone. This is a flash crash, and it is a predictable system. I will show you how to predict to make money. ICP up 26% from the bottom. Super up 40% from the bottom within hours. Dogecoin 46%. And what is this? Dog with hat up 123%. I will show you how to predict when flash crashes are going to happen and how to predict which altcoins will crash the hardest so you can get the best entry in them. How you should be using flash crashes is to get a position in a crypto that you really like, you've wanted to hold in your portfolio, but you just haven't found a good entry price. Example, last flash crash, Render did one of these. Whoa, I got a buy order. One of them was at $6.20 right here. Not even that good of an entry, guys. But this is 3 days later, and look, it's already worth $10.50. Flash crashes happen because there is a ton of leverage in the market. Everyone is bullish right now on crypto, so they're all buying it using 5, 10, 15, 50x leverage. And so when the price starts going down, boom, one person gets liquidated, which sends the price lower. And it just starts a free fall of traders getting their positions liquidated. There have been 2 flash crashes in the last 2 weeks, so they seem pretty common. But at some point, as a disclaimer, it will not be a flash crash. It will be a black swan event. You can predict when these flash crashes are going to happen by one, just looking for a day when Bitcoin has been going down. When it starts hitting 5% plus down from its most recent highs, if it keeps going down and there's a lot of leverage in the market, there's a good chance we're going to see a flash crash. Now, you just need to come over to this website, create a free account, and come down to the heat map, and you can see for yourself at that time how much leverage is in the space. You could see here on the 5th, every single crypto was red right before the flash crash. It was so crazy that if you wanted to take a long position in Caspa, you were paying 256% APY just to hold the long position. That is insane. And you can see here where the flash crash happened, and boom, everything resets. But look again today, we're starting to see a lot more red. At some point, we're also going to see the opposite of a flash crash when people are extremely short in the market. Meaning when this liquidation map has a lot of blue and dark purple, that will be the setup for a flash boom. Here's a pretty common way that a flash crash will play out. You can see here in the red and green, we have Bitcoin. And then here in the straight green, this is Super. You can see that they were correlating pretty well together up to the point where Bitcoin had taken already a negative 6% drop on the day. And then on that very last candlestick, that's when the altcoins get destroyed. And you can see here, Super dropped. You can't even see it in the recording. It dropped all the way down here. It's barely on the chart. And so this is the point you're looking for to make your long position. Let me show you how to find the crypto specifically with the stupidest amount of leverage so you could find the best entry positions. Now, you could just come over here to this heat map and say, oh, look, what has the highest leverage? But when there is a just free fall of prices because of mass liquidations, what matters most is what's happening on your exchange, the one you're using. Not every exchange is going to match up and have the exact same prices during that moment of mass chaos. Okay, so what I recommend is come over to your favorite exchange. MEXC, in my opinion, is the best. And let's take a look at the funding rate. When the funding rate is above 0.09%, that's what I call the stupid zone, meaning it is way too damn high. Now, some exchanges, you got to be careful, charge a funding rate every hour, especially some decentralized exchanges. The vast majority of them, including MEXC, charge this funding rate every 8 hours. So you got to divide by 8 if your exchange does it every single hour. Now, there is a big problem with trying to predict these flash crashes. Okay, I've already found a crypto with a stupid funding rate that I believe in long term and want to position in. So I go over to the most previous flash crash and I get an estimate of how much it might drop. It went from a buck 46, which is about where it's at, all the way down to $1.07. So I probably want to put some buy orders in between like $1.20 and $1.10. The problem is that you have to have a bunch of money on the side just sitting around to do this. Because in order to put these buy orders in, I have to have USDT just sitting in this account, waiting and chilling. And what happens if Super and the rest of the market goes up another 50% before we have a flash crash? Then you just didn't make any money on all that USDT that's been sitting here. I've thought a lot about how to solve this problem, and I've come up with 2 different solutions, but neither one is perfect. One of the solutions is to hold all of that money in either Ethereum or Bitcoin, because both of those are going to crash a lot less than the altcoins. So Bitcoin only dropped 14% during the last flash crash, whereas most of the altcoins dropped 30+%. So what I did in this last one is I saw, okay, flash crash might be coming. I had moved some Ethereum onto MEXC, and I was physically sitting at my computer waiting with some notifications up for this to happen. But then you got to do all the purchasing manually. You can't just put in some limit orders and make some purchases. So I only got my purchases on render at $6.20, but I missed the bottom by 10% because I had to do it manually, and that's just slow. These prices at the very bottom may only last for seconds. The second solution is to use CoinM futures. Okay, there's 2 different types of futures. USDT-M means you put USDT up as your collateral. The second one is CoinM, which means the coin you want to buy, that is the coin you put up as collateral. So you're not holding USDT, you are holding that coin. The problem is CoinM futures on almost every exchange just have Bitcoin and Ethereum. So you can't actually do the altcoins. So let's do an example trade with CoinM futures. So let's go over to Ethereum. Let's figure out, last flash crash, it dropped 16%. The most recent highs here were at $4,100, which would put us about $3,500 for the bottom. Again, you have no clue where the bottom might be, but this is our best estimate. So what you'd want to do is layer in your purchase orders. Let's buy some at 3,800. Let's buy some at 37, 36, 35. Because if you just have one purchase order and the price misses that by $1, you don't get filled at all and you lose all of your potential profits. Another thing you don't know that will get you wrecked is that this leverage number right here is lying to you. It is actually higher because when you are doing CoinM futures, you are putting a coin in as your collateral, not USDT, and the coin changes in values. So let's say that I buy one future, 1x leverage, right here at $4,000 a coin on Ethereum, and it drops to $3,000. So I lost $1,000 from the futures contract, but I also lost $1,000 because the collateral I put up, one Ethereum coin, lost $1,000 in value. So it doubled my losses. Here's a spreadsheet I made to simulate the returns using USDT and CoinM leverage futures. So we set the leverage to 1x on both of them, and what you would expect to happen is that when the underlying coin goes up by 20%, both of them will get you a 20% return. But whoa, when you are using CoinM futures, it goes up twice as much because the coin that you put up as collateral also went up by 20%. And what I found out playing around with this is that CoinM leverage is always one higher than when you're using USDT. So if we bump this up to 2x and then click return, look, now the returns are the same. It'll happen the same if we go -20. Okay, let's move them up. Let's go 5 and 4. And look, the returns are exactly the same. This is why you should usually be using CoinM futures if you can, because this funding rate is getting charged based on the size of your position. So if I can use 1x leverage on CoinM futures to get the same amount of leverage as using 2x leverage on USDT futures, I'm literally paying twice the funding rate to get the same amount of leverage. Now, the funding rate will be different between the 2 different types of futures. Take a look at the history on your exchange and see what they have been. And also, if you're using super large leverage, 10x, 50x, it doesn't really matter.